Today on It's the Economy, we present to you a conversation that my colleague Latha had with Citigroup's Executive Vice Chairman Viswas Raghavan, who heads both corporate and investment banking in Citigroup worldwide. In a conversation that spans global equities, Indian equities, gold, and Citi's plans for India, Latha began by asking him if there is growth in America beyond the AI companies and beyond the AI theme, or is it just confined to AI and chips?
I'm asking you, if outside the AI part, when you talk to corporates, what's the sense?
So look, I think there too, you are seeing growth across the board. And if you look at, that growth engine, technology, I'm not talking AI, technology is very much at the heart of it. So if you look at a major industrial in the US, they're looking at acquisitions in the tech adjacencies. So software, so if you take a real diehard, core industrial company, they will look at the tech adjacencies. If you take retailers, it's e-tail. So if you look at the autos, it is kind of, autonomous driving, driverless cars. It's really a tech nexus there. Same with healthcare. So I think a tech undercurrent is very much at the heart of, the growth, but there is growth everywhere.
Okay.
The biggest wild card is M&A. Okay. So with valuations where they are, if you're not growing organically, then it is acquisitions, and that is really a big part of the growth theme.
Okay, no, I'm persisting on the growth story simply because when this tariff issues cropped up, there was a sense of uncertainty in the world, and there was a lot of fear that global growth will slow down. You're not seeing signs of that. I mean, give me US and global separately if you wish.
I think US, what you're seeing is 20%, maybe even up to 25%. You're seeing tariffs generally are being absorbed in most cases, in some cases passed through. The inflationary impacts of those remain to be seen, but right now you're keeping a lid on it, and most companies are assimilating the tariff impacts. If it is beyond that, then the question is, you have to rejig your trade channels, you look at your supply chains, and then say, okay, what do I do? Do I friendshore, nearshore, onshore, offshore? How do I, play with the mix so that I'm still competitive and I can keep doing whatever I used to do? But what you're seeing is there is an element now prevailing that in most cases, sanity will prevail. There is kind of a base tariff that will stick. But beyond that, reason will prevail. There's a deal to be done. There'll be negotiations, and you will land somewhere which is acceptable.
Actually, in the past 2 weeks, there have been a series of deals, especially in the ASEAN countries. The president has also tweeted that something is coming with India. So it clearly looks like the ruffled feathers are getting softened at the moment. But let me come to financial markets itself. What have you made of this rally in gold? You think it continues?
I think multiple drivers there, and it's a bit complicated. I think clearly gold benefits at times of tumult when there is uncertainty. You flock to that asset, and there's an element of that. The other point which is relevant here is clearly there's a lot of government debt, Western government debt, that needs to be rolled, refinanced. You take it. I mean, 30 trillion plus in the United States. There's France. There is the UK.
Yes.
And a lot of that debt will come up for redemption, rolling over, refinancing and the like. And a key kind of factor there is not all the traditional buyers of this paper are natural buyers of this paper in the same magnitude going forward, because of geopolitical tensions, because of different stances. So I don't think it's been I've not seen any kind of calculation, but it's not entirely, just a coincidence that, you have gold at $4,000, $4,000 at a time when, you have got, government debt also kind of piling up. So the question is there any kind of rebalancing that's happening within those portfolios?
Let me couch the question in the context in which you have come now. We just saw NBD buy 60% stake in an Indian bank, RBI, and then we saw before that SMBC buy about a 24% stake in Yes Bank. So foreign bank interest, not just private equity, which is of course Blackstone is buying. Foreign bank interest has increased. Can you just explain, would Citi be doing more? What explains this interest?
So I think this is a pivotal moment because just like in 91, 92 was a pivotal moment for the equity markets, I think this is a pivotal moment for FDI liquidity flows into India. So I think, really kudos to RBI and, really I think the whole kind of regulatory framework for enabling this to happen, because this will be a watershed moment for liquidity flows, just like the gates were open for equities, a few decades ago.
Yes.
So I think this you will mean more liquidity flows. I mean, yes, you talked a few about the bank investments and the like, but I would say this is auspicious for broad liquidity in general. And this is good for corporates. This is good for inward investment.
Absolutely.
And this has come at the right time, and really hats off to.
Yeah, we could do with more banking capital.
Absolutely.
If this growth story rolls the way it is, which is going to be my next question. I mean, I know you're looking more at deals and banking rather than, FPI flows, portfolio flows.
Yeah.
But actually, lately the flows have been attracted to. China and some of the ASEAN countries.
Yeah.
Do you see the reversal?
Absolutely. I think it's a no-brainer. I mean, if you look at there are pockets. When you look at the big pockets of investment, America rules right now. I mean, this is where
outsized.
It's outsized. I mean, nearly, close to 70% of the world's capitalization is in the United States. I mean, U.S. corporations, take 40-50% of the world's profits are generated by U.S. corporates. The pools of liquidity, whether it is in public markets, private credit, private equity, public credit, all the walls and pools of liquidity are there. And the point is, if you wanted to invest, where do you go? So I think Europe is kind of, soul searching a bit. The UK has its own kind of nuance post-Brexit kind of problems and issues that it is navigating. France, you've seen the story. Germany is kind of rediscovering its kind of industrial, strengths and the industrial framework. So I think Europe is kind of, right now, it needs to refocus and rejuvenate. China, you cannot ignore. I mean, it is an incredible economic power.
Yes.
We will figure out how to navigate China better and better. And right now, I think most folks are figuring out how to navigate it in the current, even more so in the current tariff framework. And then where else do you go? It's India. Okay. So there is an inevitability to India ruling the waves, its relevance, massive consumption economy. When you got 1.4 odd billion people, whatever we can produce, we can consume, within this country. And also most folks are actually going up the consumption curve.
Yes.
So disposable incomes are going up, and quality of life is increasing and improving. So I think you cannot ignore.
So the portfolio flows will come.
The portfolio flows will come, and there has been the market has had an incredible run.
Yes.
Retail interest has been super strong. I don't have a view where how much leverage sits in that portfolio, in that framework. But clearly, retail have been big buyers, herein. So I think India, medium, long term, you simply cannot ignore.
Let me come to the financial markets yet again. You don't see this AI boom tripping markets. Is it like overdone to such a point, like we saw, at the turn of the century with the dot-com stocks? You don't see anything like that it can.
I mean, famous last words. If I had a crystal ball. Okay. What is incredible is look at the dot-com boom. If you look at the whole internet revolution, and it started 97 or thereabouts, it really got hold. You saw frenzy. Any company with a dot-com could go get an IPO done, and then you saw a bit of a correction, and then look at where the 2 decades of prosperity. E-commerce was invented just then, and it is now, it's mainstream.
Yes.
You do not, most of us, that is our, our consumption channel.
Our way of life.
Our way of life. So I think AI will do something similar. It'll be seismic in the impact it has, and it'll be incredibly accelerated. So this will be, it took us 2 decades. This will be much more compacted, and new leaders, new champions, new heroes will emerge, and certain legacy models will get crushed. I mean, there's a natural. It's a bit Darwinian in a sense, and there's a natural evolution that comes on the back of that.
Fair enough. So the concept will survive, but the fittest will survive.
But exactly, and the point is, within that, fasten your seatbelts. There'll be rally correction. There'll be a lot of volatility. It'll get overdone in some cases, and it'll get oversold in some cases. And when it gets oversold, there's a whole bunch that are waiting to pile in, and then and life goes on. So I think we get too kind of besotted by kind of the the short term, and it's too myopic to kind of just say is this overdone? Is this gonna the revolution is absolutely here, and within that, it's a roller coaster. I think it'll have its moments, and you got to approach it eyes wide open. The one thing, as I said, I do think though that unlike the whole internet era or the kind of pre-dotcom era, I do think that the early winners will also feature. Many of the early winners will also feature as late-stage winners. Whereas you remember with that,
with the dotcom, that was not the case.
AOL and Netscape and all of that, and then you had some real champions come through, after. But here, I think the investors and the companies that are really kind of leading us into this revolution have the wherewithal, the financial wherewithal, and the economic might to really invest and kind of see through this journey.
It's difficult to see a world in our own lifetime without the Magnificent Seven. I mean, they're too solid to be wished to be.
And does the mix change? There'll be somebody more magnificent that that comes, and someone who loses and falls by the wayside. I think that's inevitable. That's kind of a fact of life.